If you're here right now, you're looking into index universal life policies. If you are like most people, you are being bombarded by multiple ads, speaking with multiple agents, leaving you feeling confused on what to do. If that's you, you're in the right spot. I'm going to break down the important features of an IUL and how to properly structure them. I'm going to go over all of the vital things that you need to make sure are going on inside of your policy before you purchase one. So stick around till the end of the video. I'm going to go through all that you need to know. One of the most popular components of an IUL is utilizing them for a tax-free income stream in retirement. If we can put you in a similar position in retirement as a Roth IRA, but protect you and your family from an unforeseen emergency with benefits along the way, which would you choose? You would, of course, choose the option that provided benefits. With an index universal life policy, we can do that. We can have the same tax-free income advantages that we have with a Roth IRA, but we're going to have a death benefit and living benefits along the way to help protect your family. It's just important that they are structured properly. So let's get into the benefits. Benefit number one is with an IUL, you have a death benefit from day one in your policy that will pay out to your beneficiaries should you pass away. Living benefits. You'll have living benefits inside of your policy that will provide a guaranteed lump sum payout if you become sick or disabled prior to retirement. You're also going to have a cash accumulation inside of your policy. You're going to be able to access that cash penalty-free and tax-free should you need it. Then when hopefully none of that happens to you, there will also be a tax-free income stream payable to you in retirement. With that said, the benefits are great. IULs can be a very powerful tool, but it is very important that an IUL is structured correctly for you. Number one, it's vitally important that you meet with an educated agent in the space who knows how to design an IUL properly for you. I cannot stress this enough. You need an educated agent designing these plans for you. Some tips on how to pick the right agent and policy. Number one, make sure your agent is actually a broker and not a captive agent. Brokers are contracted with multiple insurance companies. That means that they really work for you and not any one specific carrier. So a broker is going to have more of a selection for you. A captive agent only sells for one insurance company. Obviously, if they only sell for one insurance company, they aren't showing you options outside of that one company. Make sure your broker is picking a plan that has guaranteed lump sum payouts for living benefits. There are many plans with companies where the living benefits section read, we will pay you up to a certain percentage of your death benefit for qualifying conditions. This will become a major issue for you and your family if you file a claim. The insurance company will fight you on what your claim is worth. You want to be sure that your benefit amounts are clear so there is no gray area when you file a claim. So again, make sure the living benefits read guaranteed lump sums and there's no fine print that says we'll pay you up to a certain percentage. Make sure your agent is not over illustrating your hypothetical returns. You would think that an illustration with a really high rate of return would be best, but keep in mind that anybody can throw a rate of return into an illustration to make the returns look good. However, this can be completely disastrous for your policy if you don't experience those illustrated returns. You need to be sure the agent is being conservative with the illustrated rate to ensure your policy is funded properly. Make sure your agent is funding your policy correctly. This is also really important. So an IUL has a minimum premium and an IRS maximum premium. You can also pay in anywhere between that minimum and maximum IRS limit. You want your agent to design your plan based on the IRS maximum. The IRS maximum premium will provide the agent with less commission, but will provide you with the most cash accumulation, which is what you are going for. To accomplish this, an agent should be asking you for your monthly budget for an IUL. So let's say you can afford $300 a month. And then the agent should be getting you the smallest death benefit that the IRS will allow you to have based on that budget and based on IRS Code 7702. So in 1984, IRS Code 7702 was enacted to put limits on tax-advantaged life insurance plans. The IRS did this because of all the tax advantages that a properly structured life insurance policy can provide to an insured. You want to be sure that your agent is helping you take the greatest advantage of the IRS code and not designing your policy in a way that pads their commissions. A properly structured IUL can be a great tool in your overall portfolio, and this video really just scratches the surface with how we can utilize these plans. The next step is really speaking with a qualified broker. You should have received a text message and an email from us. Double check your spam and junk folder if you don't see the email right away. If you would like one of our qualified brokers to put together a custom design plan for you, please respond to that email or text and book a time with us that works best for you. We look forward to speaking with you soon.